So, good morning everyone. Today is March 14th and I'm recording our trading journal for the day. There's been a lot of information that has come to light over the last few days, especially over the weekend. I'm sure you've all heard about the bank failures with Silicon Valley, Signature Bank, and even the bailouts. So March once again is shaping out to be a wild month. It seems to me that March happens to have some of the wildest fluctuations. It's not just to me, it's fact. There are a lot of fluctuations in the month of March. March 2020, March 2016, March 2001, and most famously March 2009 when stocks bottomed after the GFC, Great Financial Crisis. Part of me feels like March 2023 is really shaping out to be like that, given the wild fluctuations that we saw yesterday, Monday, and today, Tuesday, is a super strong day. We can see right over here on our chart, our heat map is all green. It's green across the board. Many different stocks are doing really well. You can see here technology, Apple is leading at 1.7. I think Google's up even more. So another super interesting March, and let's see what April holds, because you can only be looking forward when it comes to stocks. What are they going to do, not necessarily what they have done. Although my trading journal, I do take a lot of looks backward to see what price has shown us, because price is the ultimate truth. We have to wait for price to tell us something. So let's dive in and look at a few charts. I think an important one I'm going to dive right into is the US dollar. I think the US dollar has been a sort of an asset class where stocks are moving inverse to. So if the dollar is rising, the stock market, multinational stocks aren't doing so well, and the inverse is true otherwise. So let's peek in and see where the dollar is at. Let me just search it up here. Here we go. Okay, so this is basically a 1.5 year chart. You'll see from October to January 2023, there's been a long decline in the dollar, and now what we're seeing is since February a rise, but then just over the weekend, basically the dollar broke. And we can thank the Silicon Valley Bank for that, and we can thank the Federal Reserve for that, because a lot is coming to light. Apparently, the Federal Home Loan Bank had been making more and more loans in 2022, so somebody was accessing that feature, which wasn't necessarily a good sign. And it looks like the feds were a little bit too late to take any action. Or maybe they wanted collateral damage, that one or two or few things need to break with higher interest rates. That might be the case. Part of me thinks it is. And now all bets are off on further rate hikes. Looks like there needs to be some liquidity in the market. You can see the government stepping in and adding liquidity with this little mini bailout. And if rates don't go up, you could argue that that is not taking away liquidity. So, and yeah, that's the US dollar. And up above on my chart is the S&P. So what we want to see is the S&P 500 rally, while the US dollar sort of hangs out in a lower area here. Okay, and the other thing that we're looking at a lot is the VIX volatility. What's that doing? So volatility, we saw the massive spike last week, and now we're seeing it falling it back down right below 23. I think in my previous video, the VIX under 20 is super bullish for stocks. Part of me thinks that the VIX we can use for like complacency, which can be good for stocks. If people are complacent, then you'll see more and more of that trend continue. This is my sort of guess. So Volatility has spiked. That's coming back down. Prices are moving up. So that's sort of the inverse relationship that I look at. So we want to continue to see this calm down. We want to see the VIX calm down. Actually, while we're at it, why don't we look at the CNN Fear and Greed Index? This is actually a good tool. I'd recommend that you take a look at the Fear and Greed Index and use it as a contrarian indicator, along with maybe the MACD histogram, along with moving averages, so it can tell you whether it's, sentiment is gone up or down too much on one side. What we see here is it's actually at the level of fear. Just the other day, it was hovering around an extreme fear, around below 25. So there's still a lot of uncertainty and fear in the market. There's by no means is it our market participants feeling greedy right now. The way the Fear and Greed Index is used is multiple different factors. It uses market momentum, stock price strength, breadth, put and call options, the VIX. So basically, a lot of the things that I look at on my trading journal on a daily basis, the Fear and Greed Index puts it all together in a nice little way. And I think it's worth checking out from time to time, especially when we have major dislocations in the market. Okay, so let's go into breadth. Let's take a look at some breadth indicators, see how they're doing. I don't think breadth is something you want to look on a daily basis all the time, but I think when there's points of inflection, it's good to look at breadth. Day to day, you won't get a lot of information from breadth. Here, I'm looking at the S&P 500 and how many stocks are above the 200-day moving average. The 200-day moving average is a moving average which is considered of long-term significant support. So if more and more stocks are above the 200-day, that means that the market is healthy and stocks are rising. So what's that number at right now? It is at 47. So we want to continue to see where stocks are at. On the monthly basis, the moving average, the 10-month moving average is 3,900. The S&P is at 3,900. And I think we've talked about this before. The 3,900 level appears to be sort of a significant level since October. I don't know why. Maybe price is moving around there a lot, or it has acted or fluctuated a lot. That might be the reason. So to be bullish, we'd want us to hold above here. Okay, that was some breadth. What else can I show you guys? New highs and lows. So new highs and lows index has basically flattened. That can be constructive for stocks, because if we go back here in 2019 and in 2020, 2016, excuse me there, when the new highs and lows line flattens out, it is constructive for stocks. Another thing I will take your attention to, I just kind of made this up myself, it's not necessarily a popular or even commonly used indicator, is I actually place the MACD on the new highs and lows. Just gives me another look underneath the hood, what's going on. And lo and behold, we are seeing potential crossover here. So maybe that is bullish for stocks. I don't know. From a weekly perspective, the NASDAQ is above its 26 week moving average. So the 26 week moving average and the 40 week moving average are ones that I use. I think they can help us position ourselves whether we're going to be long or short the stocks. I don't ever actually go short. I don't feel too comfortable going short, so I'm usually long or out of the market. So we'll see. And why don't I show you a trade that I placed. I don't recommend that you place this trade. If you're new to stocks, please don't follow me into these trades, but I'm going to show you what I did. It is in Google. Well, I'll tell you what actually happened. So I went long on Google, paired it up with my long NASDAQ, which I still am. What happened is my Google position got stopped out. So I had a cost of around $92 or $93, something around here, right when I was starting to break out with this histogram. That was the buy signal. We had the blue candle, the histogram ticked up positive, and then conventionally, textbook wise, is where you'd want to buy. Maybe a little too late. But anyways, I put a stop. I always preach the stop at $89, and you can see yesterday I got stopped out of my Google position, and today it's up. So not the best feeling to have, but I am happy that I placed a stop there, and I got out. And it doesn't mean that you have to be totally out of that stock. You can get right back in, although it's going to cost you. But that is the price of trading, right? So we'll continue to watch that. And while we're on it, I will show you a current other trade that I have going on. This one, fortunately, wasn't stopped out. And I say fortunately because today's an up day. Is here. My stop loss is back down at 283, and my average cost is just around under 300 above 290. So I'm just in this level. And the reason that I got into the NASDAQ among the seasonal factors, why I added some more this morning, a little bit of a high price, is this bullish retracement in the histogram. So price is made a low here, rallied up, and then made another lower low, but the MACD histogram didn't correspond. So from my understanding and learning and training, this is bullish. So this should lead to higher stock prices. We'll see. It's all a learning journey. So I've got my stops to protect me, but I have increased my exposure. Pretty much I went from around 20% to now a third. So I'm around 33% of my portfolio is invested. And you might wonder why I'm not fully invested. Well, I want to keep my trading capital intact. It's my dry powder. So if there are even more opportunities, I can participate. But at the same time, I don't want to lose more. So being risk averse, yet risky. That makes sense. What else can I show you? Let's take a look at the ARK Fund. So ARK Fund, we know, is notorious. It was super popular in the 2020s, and we wanted to see it now because that gives us an indication of risk. And because the ARK Fund is made up of a bunch of smaller stocks, risky stocks that don't necessarily earn a lot of money, they're still far out. And I pair it up against the market to see whether it does better. Okay, just checking for time here. I should wrap this up. Okay, I wanted to quickly go over a couple trades that have occurred in my accounts and how I see the market. There's still a lot of proving to do. I think there's been some constructive events happening, the little mini bailout, market participant thinking that rates are going to stay low. So there's a few things that are constructive for equities, and my take is to have a bit of a bullish stance. So like you're at a casino, you move in a few more chips, but you still got a bunch in your pocket for any thing that might come up. So anyways, I hope you guys found that a little bit interesting. I will try to make these a little bit longer because 15 minutes ain't enough. But nonetheless, hope you found this informative. If you have any takes on the market, leave